Ladies and gentlemen, a very good afternoon. My name is Stephen Cole, and I'm honored to be your moderator for today's webinar entitled Stepping Up the Pace of Hydrogen Development. It's hosted by the Al-Attiyah Foundation in partnership with Refinitiv and LSEG Business. Now, before we start, the usual housekeeping rules, I'd like to go over them if I may. For any technical issues during the webinar, you can click on the help button. For any questions for the speaker, you can click on the Q&A. Please note, in the interest of time, we may be unable to address all the questions with the speakers. And during the session, you will be taking part in polling questions. They're really important. The recording of the session will be available using the same event link. So let's briefly go over the context for today. Global interest in hydrogen has grown substantially, as we know, in recent months, as countries develop strategies to decarbonize their economies, driven by the strong commitment to net zero emission and the urgency of taking action towards climate change. The International Renewable Energy Agency, which I'm going to call IRENA, estimates that hydrogen will account for nearly 12% of global energy use by 2050. As such, the hydrogen revolution could provide $2.5 trillion worth of investment opportunity through 2050 for utilities, equipment makers, and others seeking to curb their emission intensity. While demand for clean hydrogen is expected only to take off in the mid-2030s, this decade will likely witness a big race for technology developments. That's according to IRENA. Businesses worldwide are already moving towards scaling up the hydrogen value chain with new demonstration projects and alliances, as well as dedicated infrastructure funds and industrial hubs in a collective effort to accelerate innovation and, of course, more importantly, to bring down costs. On the supply side, consortia of the world's largest energy firms are spearheading the development of the hydrogen market, given their ability to deliver these projects and their interest in hydrogen, while on the demand side, leading brands continue to look for renewable alternatives, which is likely to trigger a hydrogen equivalent of the PPA market that emerged in the electricity market. With the growing momentum to establish a global hydrogen market, it can be difficult to follow the key trends and developments, which is one of the reasons for this webinar. And this webinar will assess the current state of play for hydrogen, offering a broad overview, I hope, of the latest and the promising developments, and providing a glimpse into what the future may hold. So I'm going to look into my crystal ball, and so are our speakers. So let's find out who the speakers are for this session. We have Charley Rattan, offshore wind and hydrogen corporate advisor, Charley Rattan Associates. We have Driss Barajo, Director of Business Development, Renewables and Green Hydrogen, ACWA Power. We have Josh Carmichael, Vice President of Hydrogen Wood, and Jeffrey Beyer, Managing Director, Zest Associates. So welcome to you all, you're most welcome. But first up, I'd like to invite Charley Rattan for a short presentation. So Charley, over to you.
Yeah, thank you very much indeed, Stephen. Thank you, everybody. Welcome to today's session. And just to reiterate what you're saying in the preamble, I think this chart harmonizes with some of the eye-popping figures that you mentioned at the start, a much more moderate start, something much more realistic perhaps than some of the figures that are out there. We can see the figures ourselves, can't we? A couple of years ago, United States dollars, there's the figure, and a nice steady increase in the next few years as the first demonstrator projects, the first pilots, and the first phases perhaps of what you might call mega projects or giga projects also come into play. I think that's realistic looking at the figures, the whole heap of figures. You mentioned IRENA, there are other ones out there as well, Bloomberg's, Standard & Poor, and they all seem to equate with a nice, steady, but substantial rise in the next next few years. Of course, you mentioned the value chain. I would certainly include steel, which I think you did, ammonia, an often forgotten part of perhaps the workhorse, perhaps of the hydrogen economy. I'm sure that Driss might have something to say that, and other elements of it. A couple of elements to it worth bearing in mind, that there seems to be plenty happening on the blue hydrogen side, which is steam methane reforming, and also on the green side, the renewable energy side, with the resources and the backdrop that goes along with that as well. You mentioned, of course, in the preamble also, hydrogen is quite expensive at the moment, and that is not something that's going to facilitate a big growth for the business. The cost needs to come down, and there are various means of doing that. For offshore wind, we use the principle of clustering very effectively. I've certainly seen that happening in hydrogen, where specialist areas are brought together, the skills are brought together, the scale starts to kick in, the skills are shared, and this is the cost reduction, perhaps the most dramatic one. Comes across from stateside, and it's $1 for 1 kilogram in 1 decade. Now that is a remarkably ambitious, I think they call it an earth shot, for the Americans to come up with. That is reducing the cost perhaps of 5 or 6 kilograms. It might be traditionally for hydrogen in blue or green form at the moment, and that's a dramatic cost reduction within a decade. Of course, not all investors. I talk to a lot of investors. They come to me for advice, as you mentioned, and not everybody's thrilled at the prospect of making a big investment and then seeing the cost of the offtake be so substantially reduced in such a short period of time. My own feeling is that might be a little bit ambitious. Obviously, we will get the cost down, which is good. And as I said, that will be done by clustering and by scale and perhaps innovation as well. Here in the UK, there are signs. It's not just nascent. It's not just fanciful. There's been any number of hydrogen roadmaps and strategies and talk in the last 2 or 3 years. But on the back of that, there is also the value chain that you mentioned, isn't there, Stephen? And here in the UK, last year, one of the biggest, I think, the Gigafactory, splendid name, was opened last year by ITM Power in Sheffield. And since then, there's been an announcement for a second Gigafactory, also to be opened quite nearby in Sheffield as well. So it's happening. It's real. It's not just on paper. For example, 200 plus employees, and indeed a hydrogen academy that plays extremely well with key stakeholders. And of course, that encompasses the UK government as well. So investment is happening, and real projects are also happening, the first stages perhaps. Another chart that shows one of a number of charts that shows the upward trends. I think you mentioned 12% in your preamble. That aligns quite nicely with the American figure, which is 14% of the entire energy mix. So it's not a magic bullet. It's not everything, but it's a useful step and a very valid step towards decarbonisation and net zero. You can see the hours mentioned there, quite useful detail. I think the source for this chart is Reuters, so anybody can check it out. You can see the investment again. You mentioned the trillions, which is of interest to global investment, and the 2030s when the real takeoff is really expected to accelerate. A massive increase. So there we are, Stephen. Back to you. We see that the figures do align with those that you mentioned in the preamble. Some really significant figures, and plenty for investors, and indeed those delivering projects, to become involved with. So back to you.
Thanks, Charlie. That's a great presentation. Very insightful. ITM Power's new 1 gigawatt plant in Northern England, in Sheffield, and you mentioned a second one as well, I think, in the pipeline, which you mentioned in the second slide, really does make it visible, concrete almost, after so much chat, which is wonderful. The world's first gigawatt scale electrolyzer factory, and it's expected, I know, to cut the cost of electrolyzers by almost 40% in the next 3 years, which is a huge figure and a huge reduction, isn't it? Thanks to automation, of course, and I suspect economies of scale. Do you think that building more factories is worth the investment? and you talked already about the second, and the way forward for green hydrogen?
Yeah, I think it's absolutely the way to deliver the green element of the hydrogen economy. We saw the scale of it, didn't we? A 1 gigawatt per annum. I think that that first phase is. And I think, strangely, I mean, you've talked about electrolyzers there. I think the costs have already come down 90% in the last decade or so. And I think there's a further projection of a further 75% in the next 5 or 6 years. You mentioned 40% yourself. So if you are to scale, and if you are to get anywhere near that American Earthshot figure, you have to do that by industrializing and scale. And I think those gigafactories enable us to do that. It's nice to see, isn't it, that the UK, to an extent, is to an extent leading the charge with the electrolyzer capacity. So I'm delighted personally, and I think it's absolutely vital that those go ahead.
Yeah, it is. It's very good news the UK is taking a lead. But which countries would it make sense to establish such plants apart from the UK, do you think?
Yeah, I think we'll copy the UK wind farm sector deal, which is will support you, but we need local content. So any country wanting to go down the green route, of which there are many, including some in the Middle East, might want to then meet its industrial aspirations through the siting of such a factory. So I would expect them to be engrossed or encapsulated in hydrogen sector deals. So if you want to build out in Germany, you might say, well, we'll put one of these in a German port or a German location. And anywhere where there is a sign of scale up, I think it's quite realistic of countries to say, well, we're happy to support the hydrogen economy, but it will be part of a bigger transition picture. And we want local jobs, local opportunities, all the things that go along with it. We don't want to just be passive and importers. We want to be engaged with it, and manufacturers and producers as well.
Just briefly, Charlie, making hydrogen real, not just the gigafactories, but you mentioned the Hydrogen Academy. What is that?
Well, you tell me, really, Stephen. It was part of the bigger blurb. I would imagine initially it'd be for training of technicians, for the people to deliver ops and maintenance of the equipment. I mean, there's no point planting an electrolyzer somewhere and then finding that you can't support it for the 50 years or whatever the duration is of the infrastructure. So I suppose it's a technician training resource. But I train on hydrogen. I took a cohort in Malaysia last week and trained them on blue and green hydrogen. Perhaps they were wanting to bring the awareness, the background, why hydrogen is important, the carbon capture and storage element of perhaps the bigger picture. But I haven't yet seen the syllabus of it, although I would watch that with interest for obvious reasons.
Yeah, me too. Charlie, thank you. I think we should move on to our first poll question now. And the question is, what do you believe is the key to unlocking the hydrogen economy? And there are the alternative answers: effective carbon pricing regulations, hydrogen standards and strategies, or government-funded infrastructure. So if you can press on those and decide which one you think is the key, and we'll hopefully... Would that mean people are sitting on the fence? I don't think so. Overwhelming support for effective carbon pricing regulations. That's great. I mean, nobody has any doubt at all that is the key to unlocking the hydrogen economy. It's a very clear message indeed, and I'm happy to say I'm not surprised. Let's move to Dres. Dres, good afternoon to you. Neom Green Hydrogen Company's $5 billion project could be the world's largest if it meets its daily production target of 650 tons of green hydrogen. That is when it comes online in about 4 years' time. Can you tell us more about what on the surface looks to be quite an ambitious project?
Well, I believe that I think there has been quite a few follow-ups to the initial announcements by effectively the most senior representative of the sponsors on this project. whether from effectively air product size or NEOM or aqua power. And I think that the project is on track to deliver effectively to be commercially in operation by 2026, and effectively, we're very much on track in terms of actually having started the works on the project. So the project is already under construction and undergoing its financing process, and is expected effectively to be online as per the target date. Yes.
And staying with you, Driss, just a follow-up question to that. Where will the planned 4 gigawatt of renewable energy come from to power the electrolysis?
So technically speaking, this is a fully integrated project, effectively, which has, as part of its components, the entire complex to produce power, the hydrogen, and eventually ammonia. And this is effectively developed in the northwestern part of Saudi Arabia, in NEOM, and the lead developer of the NEOM area is actually one of the sponsors of the project. And the entire park of wind and solar energy that effectively will power the electrolysis plant will be located in the same area. So it's almost, when we say co-located, of course, we have to effectively reflect on the fact that these are very large plants that will have effectively a fairly large, land footprint. But effectively, at the country level, yes, it is effectively co-located and effectively fully allocated to the project.
And how do you plan to optimize the project's CAPEX costs?
Well, I think that we're at the stage where what's done is done, if I may. We're actually on track on executing, and there are no longer really a plan of optimizing effectively the project. I think that now things are fairly well established as far as the project is concerned. The project is very mature, and I'm sure that some of you may have noted that as early as December 2021, Air Products did move ahead and signing the contract with the ThyssenKrupp Udo Chlorine Engineers for the supply of the electrolysis package. So that is effectively the contract has been signed in under procurement, and I think that's the corner piece of this project, both in terms of performance, but as well in terms of I would say cost and delivery of the project. And of course, the rest is either already partially procured or under finalization of the procurement. But I think there is below work that has been undertaken by the joint group of sponsors in optimizing the overall configuration and cost of the project in order to effectively get to the lowest cost possible of ammonia on this project.
So let's bring in Josh and Jeffrey now. And I'd like to take this question, the cost of electrolysis, which is obviously key. And starting with you, Josh, what are the trends for reducing those costs?
Morning, good afternoon all. So it's interesting. So I previously working in hydrogen in my last role, worked a lot for many years in the battery sector. And what I see now in the hydrogen side is following a similar trend. So in the battery sector, the first focus was on the cell level. So this is where you were focusing on the chemistry, the anode and the cathode. Then it became a pack discussion, and then an energy management system discussion, and then an operational discussion. And I see the same happening with hydrogen, where there's a focus on the electrolyzer, but then increasingly already there's a focus on the electrolyzer differences between PEM and alkaline, similar to NMC and LFP with batteries, and the compression systems and water systems that are needed for that. And then you build out from there your operational strategy, your maintenance strategy, and then the total costs of hydrogen as a production. And then once you've got that sorted, then you move into the value of the hydrogen, not so much the cost, in the same way that batteries now provide frequency and stability services in the grid. So I think if I look at it from the same lens on the hydrogen side, what's driving the cost reductions on the stack level right now, it's all about standardization and modularization, getting to that bigger block size from 1 or 2 megawatts into 5 or 10, similar to the wind industry where they grew the turbines out to 2, 5, 10 megawatts. because that's where you get the scale, but needing to have redundancy in the system, that if one of them should fail, that it still operates. The operational strategies, making sure that they can operate 80–90%. These electrolyzers need to be running constantly. But the business case around it is where the cost reduction is going to come. So whether or not you produce your own electricity or buy it from the market, if you insert it into an existing plant, or if it needs to be greenfield, all of the considerations in the project side of the business case will be where the major cost reductions will come from. And so for now, right now, immediately, the focus is on the cell level stack production, so capacity, what you mentioned before with the ITM. Even in the Netherlands, they did a project where if you were to produce 1 gigawatt, could you co-locate the factory manufacturing site into the project where it was going to be actually electrolyzing, for example? Then you get further cost reductions. I think that trend will continue, but as you broaden out and you start to look at the before and after scenario and the levelized cost of hydrogen, this $1, $3 figure, you have to bring in a lot of other factors. And so how do you transport it? So whether it's as ammonia or as a gas, should you co-locate the generation closer to the demand versus the generation? All of these things, and that's what right now we're helping a lot of clients. If you only focus on the electrolyzer stack side, you miss the bigger picture, while it is important to still focus on the electrolyzer stack.
Okay, thanks, Josh. Jeffrey.
Yeah, thanks very much. I think that's a lot of really good insight there from Josh as well. I think a couple of the other points that we really need to recognize when it comes to the cost of hydrogen from electrolysis are the input costs in particular. So not just the electrolyzer, of course, but also the renewable energy that's powering the process. And we've seen renewable energy costs fall from solar and onshore wind by about 90%, over 90% in the past 10 years. Incredible cost reductions due to scale, learning effects, and a number of other issues that have been overcome to reduce the cost of renewable energy. So I think that the kind of our foot needs to stay on the gas, and so to speak, in terms of reducing and investing in renewable energy to reduce the costs. That's one thing. Another opportunity, I think, is around vertical integration. And this is something that was especially powerful for reducing the cost of solar power. We co-located silicon mines with wafer manufacturers, with panel producers in China, and were able to achieve enormous cost reductions because of that vertical integration. I can see a similar type of approach happening in the hydrogen sector around electrolysis. One other thing I think can reduce costs from electrolysis is by co-locating the electrolysis process very near to the production site of renewable energy. As we know, electricity, there are losses when you transmit electricity across long distances, and by being able to co-locate the renewable energy site with an electrolysis site, you can really reduce those line losses. Some interesting ideas are around kind of refurbishing offshore platforms, oil and gas platforms, which are near offshore wind locations. So you can instead of transmitting your electricity to shore in order to turn it into hydrogen through electrolysis, you can instead transmit that electricity to an offshore oil and gas platform that's been repurposed, avoiding those transmission losses, and then pipe the hydrogen to shore from there. So there are some interesting ways around co-location, around vertical integration, and of course focusing on the main input cost, which is renewable energy.
Charley and Driss, do you want to come in on this about costs?
Yeah, I think from the oil and gas perspective, you might also look at the avoiding of liabilities as well. I think Jeffrey mentioned something that's happening in the North Sea, assessments of repurposing, not just oil and gas platforms, but the pipelines and the ancillary infrastructure alongside them. And of course, you might start to think about, should we have floating wind farms, decarbonising those as they still produce, and then pivot towards hydrogen going forward, all of which can lead to significant cost reductions, along with perhaps the postponing or avoiding of some of the decommissioning costs that people seem to forget about, certainly in the North Sea. It's people in the 1970s, we built the oil and gas industry in the UK. Decommissioning was a long way away, but now is long way away, but it might add up to quite an interesting business case when that's included as well. And that vertical integration that Jeffrey mentioned would certainly encompass that.
Okay, let's move on. Hydrogen from natural gas is the cheapest way to produce hydrogen, but blue hydrogen, as we know, depends on carbon capture. What has the progress been in making carbon capture viable? And let's go to Driss first on that one.
Well, I have my personal opinion around effectively the so-called blue hydrogen. I think that the blue hydrogen comes with a number of issues, in the sense that we are not yet addressing entirely the emissions associated with effectively, especially the upstream, whether it's fugitive emissions on the methane from the well to the actual from the well to the hydrogen production facility, or on the carbon capture, which today effectively does not provide a solution that is able to capture the entire amount of CO2 produced through the reforming process. I think that's one big issue. The second other issues as well is that effectively technology may be available, but the scale up and bringing it to a level of commercial feasibility on a successful way will require substantial amount of investments. And I am personally not entirely convinced that this is the best allocation of capital that is effectively available, but we could be directed straight into addressing effectively the long-term solution, which is a fully decarbonized option through effectively hydrogen produced by way of a renewable powered electrolysis. So quite frankly, I think as a company, Aqua Power does not look effectively into the blue hydrogen value chain at all. That has not come close to effectively even our business. And as well as a general view as well that green hydrogen may effectively go down the cost curve even much faster than people may expect, and will effectively displace blue hydrogen before it even becomes a viable option. So that just increases further the risk of effectively stranded assets that the fossil or the carbon-based or fossil fuel industry is effectively heading towards on a number of investments. And I don't think that this is effectively the wisest way to allocate capital in the period going forward. I would of course not even mention effectively the situation on gas prices and gas supply at the global level, for which effectively blue hydrogen right now, once you factor in the current level of gas prices, is actually in multiples or effectively substantially more expensive than green hydrogen. And it's, of course, I mean, they are exceptionally high as we speak, and this is driven by a number of unfortunate circumstances. However, volatility on prices will remain, and this is something that actually, by effectively heading towards a transition to I would say, a renewable-based option for hydrogen, we would be actually disconnecting ourselves from the issues of the volatility on the energy prices, as well as the security of supply, which effectively will remain an underlying issue even in the context of blue hydrogen.
And Josh, can you come in on this? What's your view about the progress made in making carbon capture viable?
Yeah, so Wood has SMR technology for a number of years here, or over 50 years actually, and the focus has been to either remove before or after the carbon from a process. So that's been going on for a number of years, and it's been successful to a variety of different levels and for the production of different purposes. We see now a number of clients coming forward in the refining and petrochem section looking at SMR instead of green, for example, because they have the existing process that it flows through. I think I wanted to mention a couple of things here. One would be the storage part. So you've got carbon capture and then you've got carbon capture and storage. I think there's very few projects you can point to in the world at the moment of scale that would facilitate the amount of carbon that would need to be removed from some of these blue carbon projects. You see some regions going hard for blue because they have infrastructure. So Texas, for example, where you've got petrochem, where you've got depleted oil fields. The North Sea, for example, if you've got wind coming in, you can put the carbon back out. These type of schemes, the discussion, but no one's really, I think, in Norway, they've done one, in Australia, a couple, but we haven't tested it yet, the storage part. So then you start to discuss, what else could we do with carbon? Carbon's traded at the moment. It's being used in a number of different processes. Is there enough volume for that to justify it? But aside from that, I think the bigger question here is, and I go back and forth on this often in different discussions, but I wholeheartedly agree around the green discussion that, if you're going to go straight to it, the same with China with 4G technology over telecom, rather than going into putting landline telephone in, you jump straight to the good stuff and 5G. Same with green. The issue is if we separate electricity from energy. So everyone talks very often putting the two together, but they're very different things. And so even right now, if we were to switch everything to electric vehicles, as some people are suggesting on LinkedIn, some of the influencers and influential people, let's say, around electrification. And even if we were to say, well, blue's bad because it uses gas, let's just go for green. Think about the ramifications of that. Without new wind and solar being able to be built at the scale that's required to feed gigawatts of electrolyzers, you're basically using the existing wind and solar stock. If you use the existing wind and solar stock to feed those hydrogen production facilities, your electricity sector now relies on gas and coal. So it's going to be dirtier on the electricity generation, and you haven't solved the gas problem because you still need gas feedstock for your electricity production. And by the way, you've now converted all your vehicle fleet to electric, as some are suggesting. So you've only increased the need for electricity on top of what you already have. So, it's mentioned many times around the silver bullet. Hydrogen is going to be a very crucial role in this, but let's not too quickly jump to any conclusions on this without a holistic approach to the complex problem. And we're seeing that now with some of the things that are playing out, and ammonia and fertilizers, for example, on the back of some of the stuff that's happening with gas. It's a very interconnected industry, feedstock, demand, and transport that we need to be factoring in.
Interesting. Yeah, very, very good. Thank you, Josh. Anybody else want to come in on that?
Yeah, if I may.
Yeah.
Thank you. No, I just to add on what Josh is saying. So I think that, yes, it's true that there will be a tremendous amount of renewable power capacity that will need to be developed in the coming decades. First and foremost, for the electrification of the general needs. And I think that if we want to move electricity in the overall energy mix from the 20-25% where it is today to the 80% effectively target that has been set, these are tremendous amounts of capacities that need to be brought online globally. That represents a challenge, okay? But at the same time, the renewable industry has demonstrated that effectively, in terms of scale up, effectively, they are up for the challenge. And rolling out gigawatts of renewable power happens to be actually faster than rolling out gigawatts of effectively more conventional assets, from the nature of the modular aspects of the technologies, and that allows really to effectively move forward on that in both on a centralized and distributed fashion. Okay, but of course, ultimately the supply chain has to follow, and this is where the supply chain has to be further developed, and reliance on a few production centers, as it happens today, can no longer effectively be in place. There are new production centers needs to be developed across the globe in order to effectively address those challenges. Then, however, I mean, on the back of that, I mean, given the needs to develop the capacities, I think this is where I may have a slightly different view from Josh as far as the displacement of the use of renewables and to allocate it to green hydrogen. I think that that will not be wise, effectively, allocation of this valuable renewable power, because most of the existing assets actually are those assets that were developed in the earlier part of the transition that may have actually maybe on the higher end of the cost of production. And I think that newly dedicated assets effectively should be effectively used for the purpose of producing green hydrogen. and that which should not effectively disrupt the decarbonization of the electricity system, but still contribute to the decarbonization of the energy system. And this is where as well, effectively, the beauty of green hydrogen is that will allow effectively a transcontinental, or I would say a more global green energy market, effectively allowing to produce these green molecules in areas of the world where the resource is widely available, and where we see, for example, in Europe, that we've had a lot of constraints on developing renewable power capacities. For example, in Germany, where effectively there is a lot of willingness to effectively develop renewable power, but then a lot of hurdles to address in terms of permitting, land availability, and so on and so forth. Effectively, this is by effectively where effectively the transfer of green energy from one continent to the other through green hydrogen is opening a lot of opportunities, where in parts of Latin America, Africa, the Middle East, or Australia, there is effectively vast amount of land and resources available to produce that green energy and make it available where it's the most needed. And I think that effectively this paradigm shift effectively should be factored into that, and to unlock really the perspective around the fact that green hydrogen is cannibalizing effectively the electrification. This is where actually I would have like a different opinion. It can be actually very well done on a very much on a complementary basis to the absolutely needed electrification of the energy system. There is no effectively debate around that this should definitely be part of the priorities.
Josh, do you want to come back to address on that briefly?
Yeah, look, so when I did the South Australia, so I'm from Australia, we did the hydrogen roadmap. We were one of the first to come out in 2015-16. And later that was adopted by other states and then the federal government. And it was targeted towards export to Japan. And the idea was that we already had well over 50 to 70% renewable energy generation in the electricity market. And at times the renewable energy was being curtailed. It was being withheld from a frequency, grid stability perspective or a grid constraint perspective. And the idea was that if it was negative price, the gas and coal wouldn't kick in, so it would have a grid, or even at positive price, there was times that the wind and solar couldn't get out, so we could put all of that energy into an electrolyzer and basically convert it into ammonia or liquid hydrogen and then export it to Japan and Korea, who had the demand and didn't have the capacity to make it. So on that point, I completely agree. I mean, that's the world that I come from. And that's where we're headed when Europe and the Middle East is very much leading that as well. And Wood is involved in a number of these projects globally. So on that, I totally agree. I'm just trying to point out, though, that, even with the things we saw on again, back into the battery and the electric side, these things take time. Even the Middle East, which is probably the most cheap location with the cheapest electricity supply, which is going to be crucial, aside from the water and the port access, you get into a situation where it takes so long to develop the scale that's needed. Some of these projects are 26, 27. What is happening between now and then? Where is the gigawatt capacity in the factories? Where is the production of wind and solar going to come from in addition to what's already in place? Or do we use what's in the system, even though we don't have the projects produced? So that's, I guess, the reality kicks in where we need to say, well, okay, and that's what Germany's now saying. Let's build an LNG terminal for gas imports and make it hydrogen ready for 2 to 3 years when the German projects or the German projects that they're financing abroad. So Germany are very good at buying hydrogen from Chile, so other regions that are making it. If that's the strategy, but let's get it ready. And you saw the announcement last week, GasUni is now going to build an import terminal, which is on the back of a gas deal, not on the back of renewables. So I think, again, to my point before, the holistic view, not just only focusing on wind and solar as inputs, but the total system. How do we get the availability of green hydrogen to the world, exported in the most cost-effective way, but as quickly as possible? That's going to be one of the challenges, irrespective of what's already in the system.
Okay, thank you, Josh. I just want to sort of take a slight break from the questions, because I'd like to open the second poll here. So I'd like to ask the question, when do you expect hydrogen production to be cost competitive for power generation without incentives? It's on your screen now. So it's basically asking you to look in your crystal ball and decide the answer. And there are the choices. In 5 years, a decade, more than 10 years, never. And I suspect that answer will come in pretty quickly. Once I get some answers to that, I'll move on to the third one. But it's an important question, because we are all talking about the future. And I think you'll probably all agree with that. There you are, not in the first 5 years. Can we go back to that? Thank you. So about a decade, but again, more than a decade. How long that would be, more than 10 years, I don't know. But it's good that nobody said never. So I think that's a good guess, a good estimate. Let's move on to the third question, because I want to talk about one of these issues where I'm going to raise in this question. What will be the first major industrial use of green hydrogen? The industrial use: steel, aluminium, concrete, domestic use added to natural gas. And I'm going to ask about one of these questions a bit later. The first major industrial use of green hydrogen. What's your view on that one? Steel, aluminium, concrete, or domestic use added to natural gas? My guess would be steel. There you are. I was second guessed. Domestic use added to natural gas. Yeah, that makes sense. Perfect sense. So 63.6% domestic use added to natural gas, and steel 27, just over 27%. Aluminium just under 10%. So pretty definite answers there, and very clear messages as well. Thank you for that, everybody who took part in that poll. Just before I go into a couple more questions, we are all looking at the moment at Eastern Europe and Ukraine, and as well as what is going on there. It does raise energy questions. And I would ask Charley Rattan, what you think, Charley, are the geopolitical ramifications about energy? What are they from what is happening in Ukraine and Russia?
Yeah, thank you, Stephen. First of all, our hearts do go out to the people involved. We've all seen the scenes. We've got families ourselves, and it's heart-rending. Let's hope that is soon at an end. But geopolitically, I'd like to think that part of the invasion pretext didn't involve the resource that's down there, because Ukraine has been mentioned as a potential exporter to the German Green Deal and so forth. And I'd like to think that, ironically, renewables wouldn't be a cause for invasion. But geopolitically, let's have a think. The trade, obviously, investors like stability, and so that's certainly not the case. And the trade routes, of course, will be impacted as well. And perhaps not just for Ukraine, but other countries, Azerbaijan and Kazakhstan, have all got aspirations, some of them large, and they might be impacted as well. The innovation, it's difficult to know which way the innovation, which drives cost reduction down as well, will go. But ultimately, it will spook, of course. It will spook investors, and it will hamper, perhaps, certainly whatever happens in the Ukraine, the Ukrainian aspect of which is built into things like Fit for 55 and the export market. So there will be impacts. I suppose it's a little bit early to know, and we just hope that it's resolved sooner rather than later. But there will certainly be impacts, and it's obviously investors do like stability.
Thank you, Charley. And everybody agrees with what you said at the beginning. Josh, could I just ask you, I don't know if you have anything to add. You mentioned Germany, and you hinted at a change of energy direction. Will that be accelerated by what's happening?
Yeah, it's so first of all, of course, to add to the points, it's heartbreaking to see what's happening, and I even debated around having this discussion for the time being while it's still happening. But as was mentioned, it is really important to understand what's happening and the consequence of this going forward, because we need to deal with it and learn from it. And I think to your question with the gas and the trade routes, I think it's, if we focus on gas, there will be a story there around, the terminals and the contracts. But you saw even with Shell, for example, announced that they weren't going to buy any contracts or any new gas from Russia, but then did have to take off some of the crude oil off the ships at a discounted price, and then later even had to admit that they paid below market rates. But they needed that to be able to service the European markets, who are consumers who every day need to turn on their lights and use the gas, whether we like it or not. And who should you buy from where in the short term becomes a really difficult question to answer. And they've said later that they will then donate the proceeds of that to charity to help Ukraine. But if we look broader than just gas, ethanol, ethanol,
I think you've frozen, Josh. I'm going to give it a few seconds to see if we can. There.
Oh, is that better?
Yeah, you're back. No, you're frozen. So could I just ask? I know this is politically sensitive, and briefly, if you will, gentlemen, address and Jeffrey, whether you have any comments about the energy ramifications.
Yes, thank you. I think it demonstrates the risks of interdependence and the need to strengthen alternative sources of energy. Just very, very quickly, and of course, reflecting on the tragedy that's happening and its severity and how horrible it is. There's been a reliance and a growing reliance, I think, on Russian gas for a long time, and this is an unfortunate wake-up call, I think, for a lot of countries that have focused on that resource. Diversification is important. Hydrogen plays a key role in that, especially if it's going to be green hydrogen, and that's I think where I'll leave it for myself.
Okay, thank you very much. I know it's sensitive, and so thank you for contributing. Dris, I'll move on unless you would like to address this as well. If not, I will move on to another question that is important, away from politics. The use of hydrogen in heavy transport has often been given as a potential use, but I wonder if that's endangered by advances in heavy-duty batteries. Dris, let's pick up with you on that one.
Well, always with technology, I think that if we limit the consideration to physics, effectively there are many processes that effectively would have never developed commercially today. But ultimately, there are some decisions that go beyond the physics alone, that include effectively commercial consideration, regulatory consideration, access to resources as well, that effectively will eventually drive the decision. And this type of process as well takes a little bit of time before effectively coming up with effectively the technology that will eventually emerge and take over. I think that, we're all getting super excited about electric vehicles. I think it's a great, effectively, journey that we have embarked on. And I think very hopeful that we will have a major shift that will effectively be one of the pillars of the required electrification of our energy system. But electrical vehicles were available over a century ago, and still alternative sources took over for a while before effectively them coming back. So we just can't say from my perspective what will be the solution until the market says. We have to give the opportunity for the market, the users, the suppliers to effectively give it a go and let the market decide.
Okay, a question from Hattem Belhuja. Thank you, Hattem. What about methanol to transport hydrogen? Who'd like to pick up with that?
I can handle this one.
Josh.
Okay.
I was going to say that there is investment in methanol, and especially e-methanol. It might be viewed perhaps more as a transitional kind of rather than a long-term future, but there's investment going on in the Nordic countries and elsewhere, and there's certainly a place within the greater picture, which you, Josh, have teased out the nuances. It's not necessarily blue versus green. The infrastructure might be a very much smart thing to do to focus on some of the early things that work for the existing incumbents, and then can transition relatively smoothly to what's coming down the future. And maybe there's some smart moves to be made, as you've already mentioned with the LNG. So I'll pass it back to you if I may.
Of course. Josh, are you back again?
Yeah, I am. Can you hear me?
Yes, I can. Yeah, loud and clear.
Great. Yeah, apologies for before. So my background before in mobility was interesting. I worked for Transdev, a global provider of bus and trains, and was fortunate to be a part of a number of big projects in Europe and actually the Middle East and South America around both batteries and hydrogen. And, for large haulage, there's a debate. I wholeheartedly agree with Driss on that comment around, the efficiencies. Well, guess what? The internal combustion was also less than 50% efficient. So fuel cells are up there with internal combustion. There is some markets like the US and others that are looking at e-methanol, e-ethanol type of substitutions right now for fuel. But those markets are very different to Europe, which is different again to Middle East and even Asia and Australia. In the US, we see that long haulage, the weight that these trucks will be pulling fuel cell is suited. Also the distances between the cities versus, say, for example, Germany and Holland is only a few hundred kilometers from Amsterdam to Cologne, to Dusseldorf, to some of these major hubs where you could easily put significant DC charging in. I think where hydrogen will play a leading role in this is not only fuel supply, so stepping away from the ethanol, methanol as a transport, it will be the fuel system. So in parts of the grid, particularly in Europe where it's already constrained and you can't put DC charging in, can we use hydrogen generation or storage as a way to overcome the electricity, not only as the fuel supply to the car and truck, but also to the electricity or the grid supply to it. And I think that's where you again, system thinking, you start to design it a little bit differently than just efficiencies, because battery is more efficient than hydrogen, fuel cell, or the methanol, ethanol, whatever's available in your production processes. But definitely Wood is doing a number of studies globally where we're looking at what is the best way to transport hydrogen, whether that's as ammonia, liquid hydrogen, ethanol, methanol, or even toluene, MCH, connected it in the Middle East back into Japan, for example. You've got Japanese companies like Iwatani, Marubeni, looking at these type of trials. There will be an efficiency technical discussion, there will be an economic discussion, and there will be a regulatory / environmental discussion. And I think when you put all of them together in a blender, each region will have their own perspective on what is then the most suitable.
Okay. Anybody else want to follow up on this one before I move on?
I'll take a quick one. I mean, I think transporting hydrogen is one definite question. I think using hydrogen for transport is another, and Josh alluded to this for moving heavy goods vehicles. I think hydrogen has a special place as well in aviation, and I think using hydrogen for aviation is going to be one of the key ways to enable long-haul flight to decarbonize. There's been talk of battery power in the past for small light aircraft. For short-haul aviation, we've already seen trials with hydrogen, and I think there's an opportunity to create sustainable aviation fuels by blending carbon dioxide and hydrogen together to create a synthetic fuel. I know the UAE is moving forward in its sustainable aviation fuel strategy as well, and this, I think, is a great opportunity to enable low-carbon long-haul flight in the future.
Yeah, I think Airbus are trialing hydrogen at the moment. That is a very interesting development, isn't it? The use in aviation. Jeffrey, just sort of as we move towards the end of this webinar, given your wealth of experience, because a lot of what we talk about does come down to viability and finance and the economics. Given your wealth of experience in the mobilization of green finance, how bankable would you say green hydrogen projects are right now from a lender's perspective?
It's a good question. Bankability is challenged right now largely by an inability to secure the kind of offtake agreements that are needed to give investors confidence that hydrogen production is going to have a buyer. So I think that offtake issue has been one that's really challenged lenders to invest in hydrogen, or even companies to maybe make a solid investment case for hydrogen. I think another issue that comes around hydrogen investment is around the technical capability of bankers. And we saw this with renewable energy, especially offshore wind, where there was a lack of ability to accurately assess the risk of investments because these projects were first of a kind or relatively novel. Banks hadn't lent for this type of investment before. And a solution to manage that was to create, in the UK anyway, a green investment bank. The Green Investment Bank was upskilled with bankers and technical assessors that could accurately assess the risks of projects. They were able to make a first investment at commercial rates in order to crowd in private sector finance to invest in novel technologies like offshore wind at the time. And I think there's an opportunity for the same type of thing to be done with hydrogen. One other thing I think to mention about this offtake issue is an example that the Germans are using called Global H2. There's a mechanism that provides this intermediary, an intermediary entity, a buyer of hydrogen that can make long-term offtake agreements with producers. They kind of buy a bunch of hydrogen for a long-term price, and then they sell that hydrogen to consumers at the other end. And this entity is able to use a double auction to get the lowest price production and the highest price consumption to minimize the kind of subsidy that has to be given to both producers. It's a really innovative way of overcoming some of these bankability issues by creating long-term offtake agreements and also stimulating the market on both the supply and demand side. So really interesting, called Global H2, if you want to take a look at that. And really innovative way of overcoming a number of financial and non-financial barriers to investment.
Just a question for Mr. Rattan. We are approached by investors, and the issue is there are lots of supply-side plans, but not so many off-takers. How does the panel see that imbalance? Anybody want to come in first? Okay,
I'm happy to jump in.
All right, very quickly, Jeffrey. No,
very
carry
quickly,
on,
yeah.
because this was, in a way, it's a continuation of the same question, isn't it?
Indeed. I think really to strengthen the kind of demand side issue, it really comes down to the whole point of low carbon hydrogen, clean hydrogen, which is decarbonization, right? The reason that we're creating a hydrogen industry is to decarbonize the economy and especially those hard to abate sectors. And I think that this kind of macro condition of decarbonization strategies, emissions trading systems, carbon pricing, net zero goals at a national level and at a corporate level, these are all the things that are going to push potential hydrogen users to switch over from the current fuel they're using to something that's lower carbon, like low carbon hydrogen. So I think those macro level conditions need to be strengthened, really to create the conditions that will allow for off-takers to really take the plunge.
Okay, now the title of this webinar is Stepping Up the Pace of Hydrogen Development. So I'm going to ask all four of you for a few seconds, the difficult seconds, starting with you, Charley. What would you say would step up the pace of hydrogen development the greatest and the fastest?
Well, I suppose we're on the route, Stephen. We do have a hydrogen strategy, certainly in the UK. Now it'd be a case of implementing it, perhaps increase the seed funding that's going in. £250 million was announced last year, but that is small in comparison to some of the other national aspirations. So I'd like to see that now with all the KPIs and the all the kind of milestones that are associated with that going to deliverables. And let's see whether the planning process can be aligned with the reality of the project developments coming through.
Driss?
I think that, generally speaking, I think that I think there are very positive prospects as far as we're concerned. That the market will get unlocked as far as we're concerned with effectively supply being available. demand is available. There is a lot of demand around in the market. People are looking for product, but effectively getting access to green hydrogen adequately priced, the supply is key right now, and effectively being able to service that demand is key to unlocking the market.
All right, thank you, Driss. Josh, very, very briefly, if you would.
Yeah, so in addition to the standard mechanisms that work, so regulation, policies, funding on both supply and demand, I think there's two kind of outliers that really drive and change and shift the needle. One is billionaires, so bored billionaires who are philanthropic and want to be investing in these to leave a legacy, and they kickstart a lot of projects on either the demand or supply side amongst each other. And the second one is companies, shareholder pressures on organizations that need to move quicker than envisaged. And you see that in automotive, cars need to step away, and you see then steel and aluminium also then decarbonizing as part of the total value chain. So I think those two external factors will be key.
All right. Jeffrey?
I'll say it in just a couple words. I mean, building on Josh's billionaires comment, I think in the UAE and Middle East, state-owned enterprises have a huge role to play here. And we've seen that already with the Abu Dhabi Hydrogen Alliance between some of the biggest companies in the UAE. So that's where I think there's a real opportunity is to stimulate the market through state-owned enterprises here in the Middle East.
Thank you so much, Jeffrey. Thank you, Jeffrey Bayer, Josh Carmichael, Driss Barajo, and Charley Rattan. Thank you very much for attending this webinar series supported by the Al-Attiyah Foundation in partnership with Refinitiv and LSEG Business. Goodbye.